There is a quiet but important distinction inside payments that most platforms in Germany and beyond are getting wrong, according to my guest today. Julius Danek leads product for Stripe in DACH and CEE, and his argument is that many platforms are still defaulting to a grey label setup where their own merchants still sees and interacts with a PSP directly, when they should be going full white label the way Shopify and Toast did many years ago. We get into why that matters, especially in the age of AI and wipe-coded software, and what platforms are leaving on the table by playing it safe. Beyond that, we talk about what platforms actually receive from Stripe Connect on day one, when it makes sense to layer capital and issuing on top of payments, and why Julius thinks German companies in particular should run far fewer RFPs and just start experimenting with these products instead. My name is Lars Markull, and I'm the founder of Embedded Finance Review. Embedded Finance Review is a newsletter, podcast, and event series covering the European embedded finance ecosystem. And if you're working on an embedded finance project and want a free intro call to get feedback and meet the right providers and partners in the space, head to embeddedfinancereview.com and request a slot. And now, let's dive in. Hi, Julius. Welcome to the podcast. How are you doing today, and in what part of the world are you located right now?
Hi, Lars. Thank you so much for having me. I'm currently back in Berlin, my home base.
That's great to hear. That's great to hear. Julius, obviously, Stripe is a very, very common name in the fintech world. Obviously, also in the embedded finance world. You want to dive into that, understand better the products that Stripe are offering. As I've been seeing in the space, there's obviously a lot of interest, a lot of different features, but the companies that I talk to on a daily basis and non-financial brands are very often also quite far from the fintech world that I think both of us and a lot of other people are very, very, very deep into that. But before we go to that, maybe I would love to hear, you obviously are responsible for Stripe product in the DACH region, Germany, Switzerland, Austria, and also CEE, Central and Eastern Europe. Obviously, Stripe has many, many product colleagues in Europe and obviously in the US. So it's quite good to understand what is your role specifically about? What does it mean when you lead for an international fintech giant like Stripe payments in this specific region?
Yes, of course. I think at Stripe, we have at this point over 300 product managers and I think several thousand engineers that all work on R&D. Most of these are located throughout the world, with a majority in the United States. We have product and engineering teams that are specifically responsible for certain regions. And my core role is ensuring that the Stripe product suite is adapted to the needs of the specific region. That is a lot easier if you're a company like Google or Facebook, where the product is pretty homogenous and it's the same across the world. But as you know, in financial technology, regulations, licensing, expectations, especially around payments, differ vastly from region to region. And so it's really important to take a region-specific lens and apply that throughout the globe. And so specifically in Europe, we have a couple of folks here that make sure that our product works well for our European users.
And are there some specific examples maybe, or maybe also you can tell us a little bit how your day looks like, right? Because when I hear about a person like you responsible for Stripe product in Germany, I would think, okay, those are the typical local payment methods. That's basically the most important thing, but maybe you can walk us a little bit more detail. What does it really mean, localize a Stripe product in Germany?
Yeah, so I'd say there's a couple of different facets to it. A lot of it is around payment methods, of course. So the big project that I did when I started was making sure that Girocard worked on Stripe terminals in Germany. That was a very long project which needed certification, knowledge of the German market, how important this is to German users, which is not always clear to our product teams in the United States that don't talk to these users every day, which also brings me to sort of the second role that I have here, which is I engage with a lot of our users in Germany on the ground. I visit them in their offices. I listen to them talk, understand what their concerns are, where the Stripe product maybe falls short, and then either tackle that with my team or bring those insights to the Stripe product teams that are situated throughout the world. And I would say that's a very valuable task of having product teams on the ground, because it matters, having the voice of the user in the room. And Stripe specifically is a pretty complicated product because if you look on our website, we have like 50 or so different product suites. We're really a financial technology platform. And so in my role, I need to have a rudimentary understanding of every single product. And then I have an expert understanding of the products that I'm working on myself, such as Girocard on Terminal or various local payment methods like Vero or Stripe Capital in Germany, for example.
And then I guess also like one part of your role or this kind of role is that you are becoming the, maybe not German ambassador, but basically like the person who understands the German market, like obviously from a product perspective, like really, really well. And then it's about, in a way, convincing your US colleagues or wherever the team is located, that this is a relevant, important thing for the success of Stripe in, for example, the German market.
Absolutely. And the German market does carry heft, as does the other European markets like France, Spain, Italy, or even the UK. And the beauty is that most of the needs that we have in the German market aren't really Germany specific when it comes to Stripe. Many of them stretch on a like pan-European. And so often I'll work with my French colleague, for example, to join forces in order to get something along across the line that's important for Europe. But we also have our own product and engineering teams that we can build things with. And so it's like this, it's a balance of, hey, what are the most important things? Those we can tackle ourselves. And then what are the ones that are like pretty important, but where we work with teams across the world. That's how I would say it.
Makes sense. As mentioned, obviously, this is the Embedded Finance Review podcast. So let's dive a little bit into the world of embedded finance. And obviously, Stripe's history is very much driven by the success of online payments. And obviously, you have a lot of customers who use Stripe to accept payments in their own e-commerce shops. When we talk to the non-financial brands, the vertical software as a service companies or digital platforms or these kind of companies, obviously they want to go one level further or like one level deeper, accepting, for example, the payments for their own customers as a platform. And I think that's where the Stripe Connect part comes in. I think this is a product that, of course, is really well known in the ecosystem, but maybe you can walk us a little bit more into detail. What does it really mean in connecting Stripe Connect, and what does it entail for the platform?
Yeah, so it may be well known in like the specifics of the ecosystem, but I'll be totally honest that when I joined Stripe, so my background is predominantly in data and software product management. So I didn't really work in fintech before, and I didn't understand the importance of Stripe Connect and that platform's played for a company like Stripe. If you roughly divide Stripe's business into two verticals, we have a direct business. So you, Lars, can now sign up on the stripe.com webpage for your own account and you can start accepting payments tomorrow. And I actually used that as a user from my previous company. But the other part of Stripe's business, and which I think is the larger part of it actually, making the abilities to accept payments, the abilities to offer financial services, making that available to other platforms, so white labeling our services. And the most prominent example of that is Shopify payments. So ShopPay is completely powered by Stripe, which they white label. So even though it says ShopPay under the hood, every payment is processed through Stripe and through our APIs. And that's really the power of what is called embedded payments, right? Embedding payments functionality into your product, even though you yourself are not a payments processor. And if you want to put some numbers to this, we have, I think on Stripe Connect, we have more than 16,000 platforms and over 11 million businesses that are connected to those platforms. So it shows you the scale. It's absolutely massive.
And from a product perspective, obviously, I mean, from as you said, like as a fintech outsider perspective, you might say, okay, this is accepting payments. Like, what's the difference accepting payments on my e-commerce shop versus accepting payments on this platform on behalf of somebody else? Maybe you can go a little bit into more detail. What is really the difference from a product perspective, and how does it matter for the platform?
So it's pretty easy. If you're Lars and you open your web shop, let's say you open your own web shop called larsmarkull.com, and anytime somebody buys a product off of you, they know that they're buying it off of you, and you're likely going to appear as a merchant record. You have your integration with Stripe, you offer the payments through our checkouts, etc. So that's pretty straightforward. However, if you start using something like Shopify payments, or if you're a service provider on another SaaS platform, and I think a very famous example of this is always Uber, the ride-sharing services, payments all of a sudden don't become as straightforward, because when you accept a payment as a platform, you typically have to split it out into the various participants on your platform. So for example, Uber has to pay out their drivers. They also have to pay out restaurants in the case of Uber Eats. If it's Shopify, Shopify has to make sure that when you create a Shopify store, larsmarkull.com, instead of doing it through Stripe directly, if you do it through Shopify, Shopify needs to make sure that the money gets routed to you from the customers. And so that requires pretty sophisticated infrastructure and is also a very regulated space. Through PSD2 in Europe, for example, you as a platform are not allowed to touch the customer money that flows through your systems. That's pretty important because why? You don't want to intermingle the money that belongs to your customers with your own operating funds, for example. Like that can lead to some severe shenanigans. And so going back to the example of Uber, Uber accepts a payment. Uber appears as the merchant of record in your credit card statement. But behind the scenes, Uber takes their 1%, 2%, 5% cut, and then the rest goes to the driver. But Uber doesn't ever touch that money. The 95% that go to the driver, that gets routed through Stripe systems because we have the right licenses in place to be able to touch that money and to cleanly segregate and separate.
Interesting. And you did touch on the couple of numbers for Stripe Connect and the relevance. And obviously you've not been part of Stripe maybe since the beginning, but obviously I would assume Stripe was founded. The focus was really on the direct merchants, right? From your perspective, maybe also that point of a little bit like outsider perspective, has there been a point in time when the focus, maybe not focus, but like relevance, of course, shifted a little bit. And it's now, as you said, the Stripe Connect platform is like not such a different beast than it was maybe when it was on the first platform.
So I think the early iterations of Stripe Connect came pretty soon after the launch for direct users. And the way that Stripe thinks about developing these products is that you develop them hand in hand with key customers. And the key customer in this case was Shopify. And so Shopify and us basically jointly developed the Stripe Connect product. And it turns out there's a lot of different use cases that you can use Stripe Connect for. And so it was basically like using this pilot customer and working with them to scale a massive, massive product at this point. And it kind of goes back to how Stripe operates in many ways with our users. Like the whole motto of Stripe is users first. And so that is really that motto in action as you're growing with this customer over time. I think at this point, over 10 years of partnership.
Of course. And as we said, Stripe Connect is often more like this embedded payments solution. As a Stripe Connect is often the first touching points for platforms to enter the world of embedded finance and financial services. I guess you mentioned a couple of times Shopify. There's a great example that very often the companies don't stop there. Maybe it takes a couple of months or years to make it a really success, but then sooner or later we are hearing or seeing issuing, meaning card issuing solutions as a platform integrate, and of course also financing products like capital. So we're talking here about the platform that provides cards for the customers, but also provides financing solution as part of the overall offering. Arguably, I would say, I mean, the pitch for company, if you're just looking at it, embedding payments, it's so important because obviously this is like a very, very crucial one. Issuing and capital are relevant as well, but feel like are a step harder for the platform to adopt and also maybe their own customers. What's your view on that with focusing on the capital and issuing product?
Well, taking a step back, what you see is that in Europe, we're much, much slower in adapting any type of embedded functionality as platforms. Even if you're looking at Stripe Connect, there's basically two flavors. Flavor one is you basically allow customers on your webpage to sign up for a Stripe account that then gets connected to whatever your platform is, like let's say Magento or Adobe Commerce. But the customers, the merchants, they still log into a Stripe account. They still have a relationship with us, but there's revenue shares on the back end, etc. Where it becomes really interesting, and this is where in Germany specifically, we still see a ton of room to grow, is creating true white label payments. So Shopify payments, there's a great platform here in Germany that exemplifies this in my view called Allo. They're a restaurant software. They have a product called AlloPay, which is also powered by Stripe on the back end. And that's really the next step in the evolution is as a platform, you don't show the Stripe portal to your merchants anymore. They really just feel like they're completely within your ecosystem. So, and where Stripe kind of takes on a true white label versus a gray label. And so my view is that in the DACH region in particular, there's a lot of room to grow with this white labeled flavor of embedded payments. And embedded payments have been around, I think, for like in the mainstay, maybe for like 5 years, 6 years, right? Like they're a term, but we're still lagging. And so what you're talking about, capital and issuing, are really the next step in that evolution as you're taking over. The way that I view this is you're entrenching yourself deeper in the workflows and in the value creation for the merchants on your platform, right? So where it's usually a very good fit is any type of vertical platform that has a user-specific core workflow that they own, and then they expand into other adjacent workflows around it. So in the case of Allo, the restaurant platform, it's restaurant reservations, restaurant backend, but then combined with payments, and now combined with offering loans to restaurants. And so as you can see, you're taking over more and more of the services that restaurants are looking for really into a platform that is made perfectly for those restaurants, kind of like how Shopify is doing it for e-com merchants.
And I do want to get into a bit more on the capital issuing side, but before I do that, I want to take one step back, because what you said earlier about the embedded payment part was super interesting. You described the two different versions of how you can embed or integrate payments products. What would your personal pitch be for the second version that you described as the Shopify Pay or Allo Pay, the fully white label? What is your pitch for a platform to go for that instead of the, let's call it the traditional approach where Stripe is being exposed?
Look at any publicly traded company in the US that has embedded payments functionality, Shopify, Toast, Square. If you look at their EBITDA statements or their financial statements, 60 to 70% of their EBITDA is coming from payments, not from their software. And what you see in those markets play out too is that as soon as you start offering payments as a core part of your product, you are getting so sticky that it's going to become hard to dislodge you, and you typically end up winning the category. Toast, for example, in the US realized this very early on and started embedding payments pretty quickly after they launched their POS system. So Toast, for context, is also restaurant point of sales and restaurant management software. I think $20 billion plus on the American stock market. So really, really big businesses. And what you see as a pattern is that the ones that win their categories are the ones that embed payments natively. And then from payments, obviously, capital, issuing, bank accounts, and so on and so on. And
some of the listeners might get bored when I say this over and over again, but I think the Toast is obviously next to Shopify, I guess, for anybody who's going to the embedded finance route, the two big lighthouse cases when it comes to embedded finance. And obviously there's a very famous quote that I love to repeat from the Toast CEO, who said something like, our customers come to us for the product, but we monetize them through financial services. And I think this is probably a good summary of what you said as well.
100%. I'd actually be curious to your take on the German market. How mature do you see this? Because you obviously have talked to a lot of the participants in the market.
I mean, exactly what you said as well, right? I mean, I think there are a lot of smart founders and leaders out there who totally get it and have started implementing it. I think the one comparison I would also make with, and maybe you know the numbers better, but I think, or the years better, I think Shopify Pay was launched something around 2016, something like this. And I think the first time, at least I heard about Shopify as a fintech was during the COVID years, 2020 maybe, or I think when maybe Angela Strange at the early 2020 put out her famous blog post, Every Company is a Fintech Company. I think that was a time when it happened, right? And so I think what we have to keep in mind here, these things take a little bit of time, right? From my perspective, it's not a very easy or not a very simple, straightforward blueprint. You just do X and then it's done. There's a lot of understanding your customers and the work that have been done. And I think specifically in Germany, I think as you said as well, I'm curious to dive a little bit more into that as well, is payments, again, it might be a little bit simpler, I would say. I think especially with issuing and capital, I would see a lot of platforms think that, we are even competing more with the banks and our customers, I don't know, they're a Sparkasse customer or any other kind of local bank in a European country. Not sure if I should really compete with them with a card or loan product. Payments, yeah, okay, I get it. That's not really what my bank really does or is pretty good at it. So I think that the pitch there is sometimes a bit harder. But
I'd say if you're a vertical software company, and we have a ton in Germany. There's a ton of vertical SaaS companies out there, platforms that don't realize that they're platforms yet because they're still in the, we're automating this and that workflow. But if you think about where users spend their time, they're spending time in your software, right? And so it's so easy to make it another touch point to offer something like loans or payments. And the reason is you often have much better industry knowledge and much better data visibility than any Sparkasse could ever have. Because think about how they do their loan and issuing decisions. Go and you give them in Germany, specifically give them your BWA and your financial statements. And then the guy that you maybe know at the Sparkasse, like hopefully you know someone there that can help you get the loan, but it'll take forever. And like, so basically like you have primacy over users' interactions on a daily basis. And so it just becomes really easy to extend that product surface. And as soon as you start doing that, you start unlocking massive amounts of value creation for your users and for your platform. And so I think it's a bit of a, specifically when the interesting piece, I think, around capital and issuing, let's start with capital first, is you do need to provide some education to your users as well, right? Like in Germany, there's a bit of a stigma around taking loans, but you can, especially with new AI tools, with all the data that you're getting, you can help users manage that. You can tell them like, hey, we see that your cash flow is always X, or like, this is how much money you're getting in. These are your, especially also if you're covering the expense side of the house too, you basically have complete visibility into the business, and you can help these business owners that might not necessarily be, they might not have a finance degree from a fancy university, right? You can help them through your platform understand the flows of their money in and money out flows of their business much better, and provide them the tooling for this. In the case of capital, like maybe a smart loan at the end of every month when supplies are due. I think there's a lot of jobs to be done that you can do as a platform where you just have a much better understanding than the Sparkasse.
And is there, like, again, coming back to your role of leading product for Stripe in Germany, is there something with the adoption of like a Stripe Capital product, something which is like unique about some of the markets that you deal with? And is it sometimes maybe a little bit not frustrating, but take some time to maybe convince your US colleagues who deal with a very different mentality of customers to tell them, okay, it's a little bit different over here. We need to figure out and help our platforms as well to make the right education.
I'd say it's a key role of a Stripe employee to do education for your own products. I'm talking a lot to our key customers in Germany on like pros and cons of implementing and when to implement and how to implement these types of products. And what I see over and over and over again is that platforms, like that's the reason why you have this podcast, right? People don't know what's possible. It's kind of like the Donald Rumsfeld, the unknown unknowns, right? A lot of them kind of maybe have heard of it some point, or they have some distinct notion that you can do more services than just provide software, but they don't really understand the roadmap. They don't really understand what concretely should we do. And that's a key part of my role here, is to provide that education, which is also why we're talking, or kind of provide a blueprint. Do payments first, then try capital, then do maybe issuing. Issuing doesn't apply to every company, but it applies to many. So anytime you want to do expense management, for example, on behalf of your customers or allow them to do that, then you should issue cards for them. Concrete example, you're let's say a platform for handymen, and the handymen do all their bill pay management expenses on your platform. They do all their orders. Why not issue them a card that they can then take to Hornbach or Obi and pay their supplies with? And maybe you do a contract with Hornbach and Obi as well to get discounts, blah, blah. Like you can get very creative with this. And then maybe you want to do financial accounts too, right? Bank accounts. This is something that we're going to be doing, that we already rolled this out with Stripe in the US. It's going to be coming here too. But we basically allow you to open financial accounts that you can send money from to your suppliers, et cetera. Like, so as a platform, you can start entering all of these different value streams, but you kind of got to know which ones are worth entering. How do you price it? At what time? How do you sequence it? And then you also have to understand, obviously, who do I partner with? How do I understand their product offering? Because when you're starting to go into these really detailed workflows, the product offering becomes complicated, right? Even if you look, like, we're famous for our great documentation, but even that can be overwhelming at first, right? Like, how do I do this? But that's what we're here for.
Makes sense. And you said one thing that I would like ask if you have specific advice. As you said, like we do in this podcast here, of course, as well, to maybe people out there who are exploring these kind of options, trying to understand it a little bit better. I'm trying to understand, is there some kind of advice from your side when the timing for a capital or issuing product is right? I mean, I would assume embedding payments is not really something that should be waiting for too long. It typically can be started relatively early. But are there some kind of factors, maybe besides the GMV, some other kind of like numbers or company developments that should have happened where you say like now it makes sense and before not so much? Or is it really depending on each company's history and setup?
I think it's so different. It depends on the setup. But I would say as long as you have core product market fit, right? That's indisputable, right? Like even for payments, make sure that your companies purchase you because of the unique value that you provide them with whatever your software is, and then you can start embedding things. But I do think that you can start embedding something like capital as soon as you start accepting payments. You just want to be diligent about how you frame it within your platform, right? Because you want to make sure that there's a certain degree of trust of users to your platform before you start implementing credit-based products, because now you're obviously potentially competing with the house banks or banks that usually have built a lot of trust with those customers, are usually the first point of their business journey ever, right? What is the first thing that you do after you go to the notary to start your business is you open a bank account. So that's where you have the longest trust points. And so you want to make sure that you've established that trust in the market as a brand and with your customers before you embark on loans. But I think you can, in all honesty, experimentation is cheap, right? And on Stripe, the implementation is also very easy through our APIs. As long as you know where to look and as long as you know how to prompt Claude correctly, you can do it fairly easy. I'd actually be curious to hear your POV on this too. How do you see that journey into the more complex use cases of embedded finance? What are your observations?
Yeah, I mostly agree with you. I think also looking specifically at the founder or the person who is a champion internally at maybe the vertical SaaS or the platform who's doing these kind of things. I think very often, not always, it depends. You want to see the product market fit, as you said, but I think more than that, also sometimes you want to see internally the success of these products, because at the end of it, issuing capital, payment are different products, so to say, but they kind of go in the same direction. So I see it very, very often that you need these internal successes of customer stories or maybe even revenue. And we spoke about churn, reducing all of these, or either increasing or reducing these numbers to basically build on top of it. So kind of going into issuing and capital when the company or the organization has built the conviction, yes, we can actually pull this off. Obviously, you can always collaborate with the right partner. I think that's not the challenge today anymore, but also get the internal conviction to be able to achieve these kind of things. And I think also, as you said, you want to be a credible provider, right? So obviously you do payments first. And also if you are doing that for a certain amount of time, you also have these small financial touching points with your customers already. And then at a later point of time can convert them into issuing or capital products as well.
100% agree. And I think where I see the advice that I would give to a lot of German companies that are still hesitant on this, we have a lot of users in Germany that are on Stripe Standard Connect. That's the gray label, essentially, right? You offer a couple different payment providers on your webpage, Stripe among them, and then you let your users choose, and then you get a revenue share. I would strongly encourage platforms to start moving away from that model and going more the full white label route, especially in the age of agents, where your pure software components are going to be easier to replicate. And what is the most valuable part of your business are these long-term connections that you have with merchants that have been using your services for a long time, but where as soon as you start implementing these more white label, going deeper down the finance stack, your product just becomes incredibly sticky. And you want stickiness, you want customer stickiness in the AI, in the age of cheap software. So I hope that message arrives it's going to open up space for providers that are very quick at implementing these solutions. And I always love pointing to Allo, right? Allo has done all of that. Allo has done capital, they've done payments. I wouldn't be surprised if they're going to start issuing cards at some point. And at Stripe, we also built specific, if you're a platform user, we show you all these opportunities in a specific dashboard that shows you hey, here's how your accounts are growing. Here are additional improvements that you can make in terms of payment methods or in terms of loan offers, in terms of maybe fiddling around with who you can offer loan offers to, et cetera. There's settings, obviously. In this day and age, there's not really much of an excuse anymore to not do it because of, let's say, engineering or product resources. I'd recommend most people to start experimenting with it as soon as they can.
I totally agree with you. It also resonates a lot with me. I did a podcast episode a couple of weeks ago with Jane, who's an embedded finance advisor in North America. And she also stressed quite a bit the whole, obviously, wipe coding AI development threat that a lot of companies face in a way. And obviously, embedding financial services is one of a very relevant and interesting way to defend yourself against this. And since I published the episode, I've also spoken to a few industry observers as well. And we kind of comparing notes as well and see, okay, who's getting it. And I think, as you said, I mean, obviously we both have an incentive or a personal bias, but I guess there's a very, very strong case, arguably, for doing that early and quickly, because as we have seen in the last months and years, things are keeping, the speed is increasing, basically. It's not reducing, that's for sure.
Yeah, and I love thinking about the touch points that you have with users. Like, ultimately, if you're a platform, you typically exist to serve the needs of other businesses, right? And what do other businesses need? It's typically they have something within their core workflows, right? So core workflows for a restaurant are the POS, menu creation, reservations, etc. Okay, you can now do that with vibe-coded software. But then they're also a general business that has general business needs. What about payroll? What about accounting? What about taxes? What about bank accounts, right? Like, that's something that we're very focused on at Stripe, is how can we provide almost banking-like capabilities? Because most companies don't really need bank, right? You need a bank account that you can pay your expenses from. That's kind of it. And if you're a platform, if you're embedded with the core workflow, if you're the number one tool for a core workflow, I think you have the right to win in all these adjacent other things. Like, everything else is a secondary function to the primary function of your merchant. As if you're a restaurant, your primary function is to cook great food and make money on your core offering, which is running a restaurant, right? It's not having great HR. It's not having great payroll, right? And so as a vertical software, I think you always have a right to win in this.
Definitely. And maybe one quick step towards this Stripe view on these kind of things. And obviously, you mentioned at the very beginning the broad product range that Stripe offers, and we touched on a couple of them, right? Specifically very core to the embedded finance ecosystem, from payments to cards, issuing, and capital. Obviously, Stripe as a company does all of them, but arguably there's also providers who focus on only one of them. How do you see Stripe as a company competing against specialized provider? Is that something where always one model wins, or does it also depend on the type of company or the area? What's your view on that, as from a Stripe perspective or Julius' perspective?
I would say it's the same. If you're going back to the restaurant analogy I just did, as a restaurant, your number one job is to create great food and sell that to your customers. As a vertical platform or SaaS platform, your number one job is to create great software that solves the core workflow for whatever your user base is. Your core job is not figuring out or managing 50 different integrations to different backend providers. If you can consolidate that, you should be doing it, especially in the early stages. And if you're growing massively later on, you can think about, okay, now, or you become a publicly traded company like Shopify, all right, now you need to optimize every single basis point of margin. And so you can start thinking about disentangling all of these providers, but especially in the beginning, you should get everything out of the box, right? When you're talking about, you can just experiment with capital or issuing. With Stripe, it's literally another 50 to 100 lines of code using your existing API keys. We have all the data on the platform, so you can just get going with it. And so that would be my recommendation. I think there's space for specialized providers, that's for sure. But I generally think they come into play either in like very specialized verticals or at certain company sizes where you're hyper-focused on a specific use case, or like really need margin improvement on a certain sub-aspect, or you want to dive really deeply into like dialing a specific knob of your credit offering that maybe Stripe can't offer out of the box. But I think most providers are going to be okay with a one-size-fits-all, especially in the beginning.
Understood. And I guess like overall from a market perspective, from my perspective, I think it's definitely great to see that there are the variety of providers, because I mean, I always remember, not embedded finance, but back in my old open banking days, if you're just like the one provider who does all of these kind of things and trying to educate the market, it always feels like very differently than when you understand, okay, there are now not just different companies, but also different approaches to this problem. And I can look and understand them and educate and understand what the pros and cons are. That obviously, again, to my point before, can also build up your conviction as an internal champion for the thing. Is like I'll get a lot more confident of doing these things because you had more research and understanding how these things work instead of just knowing one approach, for example.
I agree and disagree. Like what I see in the German market a lot is that Germans love doing RFPs, and they love doing RFPs in situations that are completely unnecessary. And the reason why I think there are RFPs is because A, there's a certain risk aversity to just picking something and bearing that risk. And B, it makes the people that run RFPs look important. And I think Germans companies would be much better off sometimes just trying things out, right? Like if you're integrated with Stripe, or you can create a Stripe account on the dashboard, just try it out. There's no excuse today to not vibe code an implementation of, let's say, a Stripe Capital or like a platform capital product within a week if you are motivated to do so. And we give you the tools to do it. And so I would urge German companies to be a little bit more experimentierfreudig, to want to experiment more with these things instead of like, we tend to be a little bit more risk averse and trying to overthink, like, who are all the different providers? What are all the pros and cons versus just doing the thing. And then you can figure out the perfect solution later, but just get something out the door.
Yeah, I mean, it was definitely not a pitch from myself for more RFPs in the German market. I would at least don't, and totally agree with you. That's very often the case, also to delay a decision or not make a decision at all because of all the things. I think the experimental thing is definitely just doing. But again, I think there's still a point of having the different options, even in this phase, to help to understand how financial services work, how they're different. And obviously, that doesn't mean delay it for 6 months, but maybe see a few things out there and then pick quickly one that fits your needs.
Yeah, I agree. And you can always look at the other SaaS platforms like Shopify, like Allo, like Toast. Like, what do their products look like? What do they feel like? Sign up for an account, try it out. Like, I think that's the best education you can get.
Agreed. Julius, what's coming to an end? What's something you're looking forward to in the next couple of months? Are there some new activities in the market? Like, what do you expect to happen in the embedded finance payment world? Is there anything that you are thinking about a lot these days?
Stripe Tour, obviously. It's our flagship event in Germany. In Berlin, June 30th. You can sign up on the website. I think if you Google it, you'll find it. So I'm also happy to chat to anyone who's there. That is something I'm excited about. Then obviously the continued rollout of Stripe Capital in Germany and the new embedded finance use cases that we're bringing over, including the ability to create financial accounts on behalf of users. And then the third thing that I am personally super excited about is the idea of the headless economy. So the idea that your primary user is not a human anymore, but it's an agent that can discover your products, compare it to your competitors, and then ultimately you pay for it and start using it on your website almost all autonomously. And so Stripe is building a ton of tooling in that space, but it's also something I'm personally interested in. I think that's something to watch.
Awesome. Thank you so much, Julius. My podcast, I started and still doing most of my interviews with non-financial brands because obviously I think there's some very, very interesting stories to learn from them, how they build financial products. But once in a while, I make an effort also to invite the other side, especially when they're product guys like you, where it's not just about the sales pitch, but also exactly understanding how the product works and how the customer think about it. So thanks again for joining and sharing your insights. If there is somebody who wants to get in touch with you to learn maybe a little bit more about or chat with you specifically, obviously you mentioned the event in Berlin, but are there any other ways to get in touch with you?
Twitter, Julius Danek, or LinkedIn, Julius Danek. Very easy. Just message me. I respond to nearly all DMs.
Amazing. Thanks again, Julius. Thank you for joining, and until next time.
Bis dann.
Thank you for listening to this episode. I hope you liked it. And if you did, make sure to follow Embedded Finance Review on your favorite podcasting app. Until next time.